Welcome to Mortgage Talk 101 here on SuperTalk 1270. Time to look behind the numbers. Buying, selling, refinancing. Mortgage Talk 101 addresses real issues in real estate. Now, live from the SuperTalk 1270 studios, here's Mortgage Talk 101 host Joe Sheehan.
Your body built for radio, saddling up the stainless steel microphone of the Mortgage Network with my co-host.
Oh, me, Dave Floor.
He's here.
I'm here. That's
here.
where I'm at today. Okay, I'm here. All
Well,
right. It's Hawaiian Shirt Day at NDHFA.
It is.
It is.
Like everybody is wearing a pattern?
No, just me.
Oh, okay.
I almost
Just
wore
me.
one today.
You know what, though?
But it's sunny in Mortgageville today. Hawaii shirt.
Hawaiian shirt, Gonzo Thursday.
There you go.
And you are, I mean, you're Mr. Housing.
Yeah.
So you know what? You can have an entire day built around just you.
Oh, absolutely. Yeah.
I mean, I think that's fair.
That's what I'm kidding. Even if I'm the only one doing it, it's all
I think
about me.
especially because you're the only one doing it.
Yeah.
I mean, you
So it's
are
unique.
you are almost our expert, or almost
an expert on something.
You are you are the almost expert, and you are a bottomless well of knowledge.
Absolutely. Yeah.
And I'm the I'm the Atari trying to keep up with the PlayStation.
You're there. No, you're just the Xbox to the.
I don't know. I don't
know
it's
any of
bad.
that
All
stuff.
we know is
I don't know any of that stuff.
all we know is it's bad. And when we get a chance to interview people, it always turns out to be two dumb guys interviewing a smart guy.
Absolutely.
Or a smart person.
Yeah.
And we do have potentially a great
we have
interview
guests coming. Yeah.
We have some great interview. We just had Ed Pinto a couple weeks ago,
Yeah.
a former CFO of Fannie Mae, and hopefully coming up after the holiday, Mark Fogarty has agreed to do an interview.
Yeah, and Mark Fogarty is?
He is the chief editor of Source Media,
Yep.
and which is National Mortgage News. So, folks, probably I would bet more than 25% of the information you hear sharing about mortgages and mortgage news probably is sourced and written by him or
staff.
and maybe 40% of it's probably under his supervision.
Yeah.
But big deal, big voice in the industry. Probably one of the longest standing voices in the industry, and to have him on,
He gets around.
yeah.
Now he's going to come to Bismarck Mandan.
Yeah, to have him on a radio show in Bismarck Mandan is a big deal.
Yeah.
So, all right, well, let's talk about mortgage interest rates.
Okay.
And the Freddie Mac Primary Mortgage Market Survey, 30-year fixed rate mortgage with a half point, 4.12.
Okay.
Back down from 4.14 from last week, and the 15-year fixed rate mortgage 3.22, and with a half point, that's the same.
Okay.
15 years
and
not moving.
Guess what changed in the last yesterday and today?
5 days of deteriorating prices. So in other words, last 5 days, mortgage rates have been getting worse. So so that average that you're getting, you'll call a lender and your rate might be higher than that because there has been a challenge. But let's go to what the our friend Bill Bodner at the Mortgage Market Guide is saying about interest rates. And so today, even though rates are trying to get a little worse, they're saying carefully floating. Mm-hmm. And that doesn't mean that you shouldn't lock an interest rate in out there, folks, if you're in the middle of shopping for a mortgage. But what it does mean is that the experts believe that rates could get better again. So when they're advising investors and they're advising people who are dealing with bulk purchases in the mortgage industry, they're saying, hey, don't necessarily pull the trigger now. You might lose money because things could get a little bit better. And most of this is based around the June's job report showed 288,000 new jobs created versus the 210 expected. So good news. While April and May were revised higher by a total of 29,000. The unemployment rate fell to 6.1% from an expected rate of 6.3%, matching the lowest since September of 2008.
Okay.
But here comes the next paragraph.
Okay.
Here's the other shoe.
Okay. It's something behind the numbers, right?
The U6 number.
Oh, we talk about that, don't we?
Which measures all persons marginally attached to the labor force. And you hear something about labor force participation, folks. This is what we're talking about. Plus total employed part-time for economic reasons as a percent of the civilian labor force fell to 12.1% from 14.6% in June 2013. The labor force participation rate remained at 62.8%.
Oh, okay.
That's the real good news.
Yeah.
That's the real good news. The unemployment rate falling to 6.1%, honestly, folks, just doesn't matter anymore.
Not a big deal.
The way we've explained this before on the show, and the reason why we've been telling you interest rates were going to stay low for a long time, and we didn't really care what the experts were saying about interest rates going up, is because in the job market, we've not seen a change in the employment status of where it really mattered. Even though the unemployment rate was coming down, the way we explained it on the show is that was a lot like having somebody who is a cancer patient and taking their temperature and expecting that to tell you how they're doing. Yeah, I mean, you take the temperature when people first start getting sick to decide which direction you need to go and telling them what's wrong with them. But taking their temperature 6 months into an already diagnosed disease is something you still do, but it's not something you base the treatment on anymore.
Right. Yeah.
And so this has been, the unemployment rate is a lot like the temperature. And that's really what's going on is, are people doing better at their jobs, and are people back in looking for jobs? Mm-hmm. So here's what we've got. The labor participation rate, steady, didn't move, which is good because that's been getting worse almost every month as time has gone on. Yep. So that has finally, we don't know if it's hit a floor yet, but it's finally stopped moving the wrong direction. Yeah. Now we'll see if it holds. But more important than that U6 unemployment rate dropping from 14.6, that hasn't moved, folks. Really, that's the unemployment rate. You want to look out at how people are really doing, and really we've been unemployed through this whole time at about 14%, and that's why the economy hasn't been able to recover. Mm-hmm. Because most Americans, even if they had a job, it's a job they were way underqualified for, paying them way less money, or it was part-time, overqualified for, or it was paying them way less money, and it really wasn't them being fully employed back in their skills or their professions or at their. So this is good news. You have a 2.5% reduction in that
year over year.
In that unemployment rate. Yeah,
that's from last year at the same time.
Yep.
So that's slowly improving.
That is slowly improving. That's the first good news. So the Labor Department also reported that weekly initial jobless claims rose by 2,000 to 315,000 in the latest week, which was nearly in line with estimates and didn't have any impact on trade. Yeah. Now, does that mean that's the first real news that should pressure interest rates to go up, besides the stock market doing well? No. And of course, today that the stock market's doing well, over 17,000.
Yeah. Cracked a new high, intraday high, right?
Yep. So we are seeing some of the good positive movement that could threaten interest rates in the long term. Any reason to get skittish? Probably not yet.
No. But no, I read Barry Habib this morning had something on this also, where talking about the actual job numbers. It's still primarily part-time work that's being created as far as jobs go. So there's more people probably taking a job because that U6 number is coming down, but it's still not full-time, excellent employment or anything. So he said, and that may be like he said, Bill, Mortgage Market Guide was cautiously floating because they don't know if people start digging into the numbers and what's really in there. Is that that might improve rates today? I think people are still making way less money than they used to. It's not. It's got to. If it doesn't convert into consumer spending, rates are safe. Right. And so that's where we're at. Well, as we head into the break, good news is rates are low. If you got what you like, take advantage of it. Lock it. We're going to come back. We're going to talk about reform. We're going to talk about things that are endangering lenders. But by the numbers, we got lots of good stuff. Government spending money. How's that? So hang on. We'll be right back after the break here on Mortgage Talk 101. Right now, 72. You're never more than a few minutes from a weather update here on SuperTalk 1270. Got a little patriotic theme going here, Jim. That's Joe singing the high parts there. That's exactly right. You should hear my falsetto. Anyway, we were going to talk a little bit about the GDP as we're coming back, but we're going to change subjects as the host of the show. I'm going to change. Oh, subjects. Okay, all right. Because I was reminded of when we were coming into the hour, the story that smart people move out of their hometowns. Oh, that to larger cities. Okay. So shall we go around the show and see where we fit? Okay. Mr. Housing. I moved from a small town to a larger town, so you would be I'm smarter. A high IQ dude, man. You must have a higher IQ. Jim. Yeah. I moved
from a larger town to a smaller town.
Jim,
we don't know what that means.
We don't know what that means.
We didn't hear that.
If there's some sort of reverse trajectory on this correlation, Jim, you're in trouble.
Yeah.
I moved from a smaller town to a larger town.
Yeah.
So I went from. Where did you go from? You went from
Tolna, North Dakota, 250 people
to
Bismarck.
Okay, but where'd you go to college at?
Oh, Grand Forks.
Yeah, and then I went from Sydney, Montana to Fargo to Minneapolis. So see, I had to take 2 steps. I wasn't smart enough just to go straight to Minneapolis. I had to step up.
Yeah. And then you went to Minneapolis and you came back to a smaller community. So what does that mean?
Yeah. So what does that mean?
Yeah.
Now I went from
because you were just a dumb college student before.
I lived in Minneapolis for about 10 years, and then I came back to Bismarck, North Dakota.
I don't know what that means.
I mean, that would be kind of offensive if we insinuate that somehow I'm going in the reverse direction.
Okay. Well, I'll go in this direction. You moved out of Minnesota, so you have to be smarter.
Oh, there we go.
Let's go with that
one. Perfect. But this, I mean, I would love to. We're gonna have to Google this story and find out what the real numbers are behind this.
Yeah, because all the different.
Because clearly, just moving from a smaller town to, I mean, obviously, most people move out of their town to do what? Go to college.
Go to college.
Go to college. Yeah. So I don't know if it'd be a big surprise that people and colleges recruit. Colleges go out looking for people with high GPAs, scores on ACTs, SATs.
Yeah.
So I don't know if this should be a complete surprise that there's an exodus of. I mean, because did you have a college in your town?
No.
And I didn't have one in my town.
I have a choice.
So there is no choice in a rural community but to leave it.
I mean, the only way I could went the other way was move to Pekin,
right,
or Hamer,
right.
Right.
Yeah.
There, yeah.
And even now, I mean, you could argue that in rural communities, you'd hope our farmers are intelligent people. I mean, they got a pretty complicated.
Most of them are really
right. Yeah, I mean,
very smart.
They got to understand commodities, and they got to understand. They got to understand all the science behind
technology,
growing stuff, technology, and I mean, you'd hope that
know what they're doing.
Your average farmer might be a pretty sophisticated person nowadays, and I think even in that situation, like back home where I'm from, a big farming community, almost all of the kids go away, go to college now. Because farming has changed so much, there's a big need to get into biology, ag sciences, as well as the ag economics to come back and actually help run the farms before they move back.
Because it's not let's harvest and then go sell it, to my neighbor. Barter.
Right.
That's not done anymore.
And it's not just plant and grow.
No.
First of all, you got 100 ag sales rep running by you with product. You got to know which ones of those are feeding you a line of crap, literally. And and which ones aren't. And so you kind of got to understand.
So I would say our ag people have to be probably smarter than
the average
us.
bear.
Us that moved away, right?
The two dumb guys interviewing smart people on the radio.
Yeah. So that's definitely an article or a news story that you need to know what's behind the numbers.
Yeah. So if somebody out there has that, just 663-1270, feel free to call. Yeah, we're gonna look it up.
We're gonna do it in another show. We can
talk about it. But if you have information on the study or understand that, we would love to know about it today. If you got the information. So okay, let's talk about GDP.
All right.
During the first quarter, this is from our friend Elliot Eisenberg. During quarter 1, 2014, GDP declined at an annualized rate of 2.9%, while employment growth increased at a rate of 1.6%, meaning more workers produced less stuff, and labor productivity collapsed.
Well,
last time GDP fell this much and employment increased was quarter 1, 1974, after OPEC quadrupled the price of oil following the Arab oil embargo. Absent a shock like that, I expect both productivity and GDP to be upwardly revised. So basically,
back to the 70s.
Yeah. Well, basically, he's saying he doesn't think the numbers are right.
Yeah.
So I love this how we never get we come on here and report the numbers and the numbers are never right. They're always telling us that the numbers will be wrong or the numbers are revised from last time. So is that? But now you had something on.
Okay. No,
on
it's the same thing. GDP. No, the key word you had in there was annualized rate of 2.69.
Right.
That it fell
2.9
or 2.9. What they do with this, folks, is the economy actually fell by just 0.74% during the first quarter. The reported 2.9 tumble assumes the 0.74 actual drop, repeats itself over the next 3 quarters. So that's a case where, okay, what did you hear in the media? Oh, the economy, the GDP went down 2.9% in the first quarter. No, it didn't. It didn't drop that much. It dropped, but not that much. And the media, they don't tell you that they maybe say annualized, but they don't explain what that means.
Right. Basically, it's almost
everybody hears is 2.9.
Yep.
Yeah.
Right.
Yeah.
Yeah, I think even we fall subject to that sometimes.
Yeah, absolutely.
Our reaction to
what
it.
else?
Well, let's beat on some politicians. Let's beat on some politicians.
Oh, we're going to beat on politicians.
We haven't beat on.
Well, this is the politicians beating on the bureaucats. Is the story I got.
Okay, you start, and then I've got one where we can beat on the politicians.
Okay, well, let's do the politicians beating on the bureaucrats first. Okay, all right. Okay, our lovely friends at the Consumer Financial Protection Bureau.
Oh,
they're getting a new office.
Yeah,
they're renovating
they need
it.
One.
They're renovating it.
I mean, you got to have a nice place to house those $100,000 salaries.
Yeah, the 30-year-old people that have never done a mortgage loan in their life, and
making $150,000.
Figure they know more than Joe. Okay, last year they estimated this renovation of their headquarters, the rented headquarters in D.C. would cost it would cost roughly $100 million. Now that cost has spiraled to $215 million.
Well, $100 million just ain't what it used to be.
No, not absolutely. No,
because inflation's been out of control. Wait, no, it's
not, Joe. No. Okay, that equals more than $590 per square foot. $590 per square foot.
And we think we're having problems with commercial rental property.
Yeah, holy cow. Okay,
$35 a square.
That means that the CFPB is spending much more per square foot than it costs to build the Trump World Tower at $334 per square foot. This is Donald Trump we're talking about. Okay, he only spent $334 a square foot, or the Burj Khalifa in Dubai at $450.
Because they've been known to be a little chintzy on that.
Oh yeah, the sheiks are a little chintzy over there. Yeah, they're tightwads. They're tightwads. Now, the CFPB director described the building as a dump in testimony before Congress. Now, one thing I'll give him a break on is the committee, the Financial Services Committee in House of Representatives was questioning him on this, and they said, "Well, why are you paying this? Why are you paying for the renovation versus the landlord?" Well, I mean, depending upon what you're going to do, I mean, the landlord's going to say, "Oh, but, this works. You want something extra, you got to pay for it." So that's not out of line, really.
Well, I am almost surprised that you would. I wonder what the term of that lease is because even a landlord letting somebody over-improve your property too far. I mean, subjects you to potentially having marketability issues for that property in the future once it's vacated, which makes me wonder what the true cost per square on this building is, because for the landlord to say, yeah, go ahead and do these massive over improvements, I guess we don't know for sure they're over improvements, but to put this amount of money into the building, I mean that must be a good lease. So I wonder what the real cost per square on this lease is.
Yeah. That'd be interesting. But, obviously Congress is concerned, well, how much higher is this price tag going to go? I mean, it's already gone up $120 million from your original. So
yeah, we've only had 100%. We've had 100+% increase
in a year.
In a year.
Yeah. So it's kind of like how, these guys keep stubbing their toe with things.
Who gets that? I mean, you and I have both done commercial renovations, improvements, and expansions on properties and buildings that we've been involved in, stuff like that. Could you imagine going back to the Industrial Commission telling them you were over 100% off?
Oh, God, no. And you'd never do that.
On the improvement, not just not the cost of the actual lease, the full lease.
This is just to make
the improvement, over 100% off on the improvement.
No, we had to do that when we moved to our building 5 years ago or whenever it was. But, we bought new furniture and whatnot, and a few walls were knocked out, but I think the landlord took care of that. Yeah, I mean, to 100% cost overrun. Yeah.
And for the average person out there that doesn't deal with negotiating commercial leases, just so you know what, in Bismarck, Mandan, what you see people being able to rent space for, depending on the quality, location, build outs by the landlord and stuff, you're looking at anywhere between $15 a square foot in a rental to $60 a square foot.
Yeah.
That would be your range. That'd be your range from, some basic office space to some of our more nicer,
upscale,
opulent scale. Yeah. And depending on how much space it is,
Yeah.
Are you talking about 1,000 square foot or 5,000 square feet or whatever?
Yeah.
But anyway, that's the range you're talking about. And so here we're at $595 a square. Now that would be on a 1 year, but even if you broke it up over 5,
that's the renovation cost.
That still would be huge, not even counting just the space itself.
But then what are you paying for that space?
Oh my gosh. All right, we're coming back after the break, Mortgage Talk 101, and we're going to talk about some more fun things they're doing that will affect this will actually affect your home loan in the future after the break here.
Get the traffic and weather information you need anytime on SuperTalk 1270 and online at supertalk1270.com.
And we're back, I think.
Kinda.
We're coming back.
It's Patriotic Day.
We're coming back.
America.
All right. Okay. So here's another one where we can blast them.
All right. So this is blasting the politicians.
Yes.
Okay. All right. This is the segment today.
Yeah. So
right now,
middle ground GSE reform proposal would keep Fannie and Freddie alive. So some Democrats come out and they're going to try to take another crack at reforming Fannie and Freddie. Folks, all your 30-year fixed rate conventional mortgages go to Fannie and Freddie. And so this is a big reform, and this is a big thing. Everybody's been fighting about this and how they're going to do it, and we had Ed Pinto on last week talking about the need for this, and everybody thinks we've got to do it. We've had Frank Garay from
Frank and Brian, the National Real Estate Post,
and they talked about how
leave them alone.
Reform's already been done. We don't even need to do this stuff, and so this just isn't going to die in Congress because, quite honestly, I believe that this is a fight to get your name on a huge bill.
Yeah,
this is a legacy topic now.
Okay,
and so what everybody's out there doing is they're trying to fight to get their name on a bill where they saved and changed the housing industry forever.
So does this one have a better name than the
I
other
don't know
one?
if it had a bill. It's probably called the middle ground bill.
Okay.
I don't know if it has a name.
Okay.
And this isn't so much about the bill themselves because it's all different version of the same thing.
Yeah.
It's all about shutting down Fannie and Freddie, who are working now.
Yep.
And it's all about coming up with some way to insure things and make lenders put aside more capital.
Yeah, and tear down a bureaucracy and create a new one.
Right, because we have $215 million to spend on renovations, but we don't have $215 million to help people buy homes.
No.
And so here Delaney is the Democratic congressman, and this is more about what he says that just infuriates me.
Okay.
And so if this article isn't portraying him right, I apologize. But we're getting this from who are we getting it from?
Mortgage Orb,
Patrick Barnard.
Okay.
So it's his fault if he's not characterizing Mr. Delaney correctly. Right. Delaney's, however, said that the industry fears that GSE reform will be too disruptive are way overstated.
Oh, okay. Overstated.
Okay.
All right.
We have had GDP growth. We've had stock market at 17,000. We've had improving unemployment rates. We've had
low interest rates.
The recession has been over for how long?
5 years.
And we are in a recovery,
small,
so to speak.
Gentle, slow.
Yeah, it's gentle recovery. We're in a gentle recovery,
which is okay.
And the housing industry is doing
really not that well.
Not that well.
Other than the low interest rates, it's not really doing that great.
It's not doing good.
It's not the leader out of the recession that it usually had been in previous times.
Especially after deleveraging over 50% of some values in some markets. And, I mean, you really, having a housing industry that cannot recover with improving employment picture and record low interest rates in the 3%.
Yeah.
Subsidized mortgages backed by Fannie, Freddie, and FHA with low down payments of 3 and 3.5%.
And there's not enough people buying homes.
And there's not enough people we can get qualified to buy a home. And even the investors, if there was no guarantee behind Fannie and Freddie, where would they? There's just no confidence. Yeah. The builder confidence has been at record lows and has barely ever registered a pulse of positivity. Yeah. We never seem to get a improvement in existing and new sales more than 2 reports in a row. And even let's go locally to NDHFA. Investor confidence actually had you guys moving off of your bond issues into selling servicing.
With securities, we were doing Ginnie Mae securities because it was difficult to sell a bond issue at the time.
Because investor confidence
was low. Even though North Dakota was certainly perceived better than other places, it was just the general overview of the sector, so to speak.
And that had real consequences to borrowers using your program. Yeah. This is what people don't understand. So a guy like this comes along, Delaney, and goes, those people are just making this stuff up. It doesn't really bother anybody. It's just paper wash in the back room. But we used to have 1-year locks with you guys. Yeah. And when you switched to the Ginnie Mae model,
it had to go away.
You had to go away. So all of a sudden, it started costing borrowers a substantial amount of money to hold or extend their locks on their interest rates with a program that had never had that problem before. Yep. Now, investor confidence has returned.
We were able to go back to having longer lock periods, and we were able to sell bond issue, with no problem, et cetera.
But it took 3 years?
Yeah, we were doing Ginnie Mae securities for 3 years. Yeah.
So when the investor confidence goes away, when confidence overall goes away in how something will work because of change, it winds up having real impact to people who are trying to access the money, and it costs them money, and they lose options.
Yeah, it's not, they think, well, okay, we have to get rid of Fannie and Freddie, but the consequence of all this goes down to the end user, the consumer, as it always does. And that's the bottom line. I mean, he may think, well, there's no big deal, but it affects the consumer at the bottom end.
Let's just read what he said.
Okay.
I think markets adapt much more quickly than people believe. The housing market has adapted.
Well, it's adapted to where it's very tough
into a nice
nationwide.
Into a nice little Midland road.
Yeah, that's how it's adapted.
That's how it's adapted. Yeah. It's adapted to living in its funk. It's like learning to live sick.
Yeah.
I mean, and so he goes, I think we need to consider that the context of the size of this market, this is $1 trillion a year market, and we shouldn't just let some paperwork issues and forcing the market to think differently disrupt the implementation of meaningful policy. There are plenty of incentives for this market to come up with a new system and get up to speed. And what he's talking about is that the resistance to this reform is just because guys like me, and guys like you, just don't want to do more paperwork. That we like the paperwork we have now, we understand it, and that the only reason why we don't want to have reform is because it's going to create new paperwork. No, okay.
Oh, I do. Listen, I think it might end up with more. It might end up with more paperwork. Yes.
Yeah, we just don't want more paperwork.
Well, that's the problem, folks.
The problem is the paperwork represents real changes in the numbers and the cost.
Yeah.
Every change in paperwork isn't just a change in paperwork. It's not that you're saying potato and now we got to come up with a new piece of paper that represents potato.
Yeah.
It's real change. It's real changes from potato to meat industry. Yeah. I mean, it's the paperwork changes to represent real new things that have to be done.
Yeah.
Or new things that a borrower or a lender has to comply with in terms of action and costs.
Yeah. Well, any bank in the country, what's happened to their compliance costs just to make sure they're following the rules in the last
I know
3
I've
years.
seen numbers as high as 50% over 3 years.
Yeah. So, and that is all due to paperwork. And making sure the bank is complying with the regulations that are out there. And I don't know, and the real thing there, folks, if that's driving the cost up to the bank, that means, we've talked about this before, interest rates might be lower because the banks are pricing all this stuff in. I mean, it's all priced in your interest rates.
I've
that you're getting
explained that
on
my
loans.
pricing to cover our cost. I've done this on the radio. I've said this many times.
Yeah.
My pricing to cover our cost, affecting a customer's interest rate, is up by over 30% since 2009.
Yeah.
So yes, I was offering better interest rates for my clients, respect to the cost, in 2008 than I am today.
With less hassle for the customer because of all the
my profitability was
documents.
higher. I was making more money per file, right?
Yeah. And the customer, what the consumer sees is the regulations that I have to comply with. I got to sign this paper, and boy, my appraisal has got a problem, and the seller sees the problems, etc. So it's.
So how does Delaney respond to those who say that any GSE reform will invariably make lending more expensive for consumers because it requires the lenders to upgrade systems and train people?
Okay. What does he say?
Who cares?
Who cares? Oh, my goodness. Okay.
I don't believe that. He snapped. He snapped. Listen, I was in the lending business, and I can tell you that the big operators will figure it out and reorganize their business accordingly. They have way too much financial incentive not to do that.
Big operators.
The big operators.
The big operators. That's kind of a key word there, isn't it?
Here's what they do. And here's what he doesn't understand, which makes me think he was never truly in the lending business.
Okay.
They have, I can tell you the operators will figure it out. Yes, they will. They will raise the price.
Yeah. Could pay for it.
They will raise the price or lower the service.
Yeah.
They will either lower the service or they will raise the price. They will figure it out, but they won't lose money, dude. And anyway, it comes back to affect the consumer.
Yeah.
Yeah. So I love these guys, and turning the second largest fixed income market in the world immediately over to the private market without natural organic transition to more private capital, could be a problem, but I think it's overstated.
Yeah, okay.
Basically.
Well, James Brown, excuse me. All right.
The great late.
New movies coming out about James Brown.
This is one of my great. This is
cool
one of the
song.
great all-time scenes in the Rocky movies. Apollo Creed.
Oh yeah.
Apollo Creed dancing down, dude.
Yeah.
He does that little punch spin
Yeah.
move. Yeah.
That's right.
All right, back after the
All
break.
right.
Mortgage Talk 101. We will close down the show before the Independence weekend. Here we are.
Our own radio station. Not Fargo, not the Twin Cities. Proud to be Bismarck and Mandan's own SuperTalk 1270.
I was born.
I was too.
How about you, Jim?
Born in the USA?
Were you born in the USA? Yeah. Every once in a while, a Canadian sneaks down here.
Wonder how many times this song is played on
Over the 4th of July
over the
weekend.
4th of July.
Oh, anyway, well, you know, there's my rant on Delaney. Who cares?
You got a final word? You got a final word for us on Mr. Delaney?
You know, the housing market is the one area of the economy that the only reason we've seen recovery is we've seen recovery in prices. Mm-hmm. But prices got blasted by the foreclosure market. And I mean, where you had, declines in pricing where, you're picking up 3-bedroom condos in Florida for $20,000, $30,000, $40,000 sometimes. Yeah. Down in Arizona, whole houses for under $100,000.
Exactly.
Cash. I mean, if you had cash. The houses that were selling for $300,000 and $400,000 before. I mean, it would not be hard to, have some improvement in prices, and prices have done fairly well and normalized out and returned to some sort of a healthy standard. But overall, in terms of building new construction and sale velocity to drive appreciation beyond basically the new base point, it's been anemic at best, unless you're in a place like Wyoming, Montana, North Dakota.
Yeah.
And In this year, 2014, with interest rates in the 4s, this has been, nationally speaking, the mortgage industry, overall volume of mortgages has been terrible.
Oh, yeah.
And even here in North Dakota, our first 2 quarters were not what anybody was expecting,
everybody
with
was
interest
slow.
rates at 4%.
Yeah.
So you look at that whole picture, and you have a guy like Delaney sitting there saying that monkeying with the housing markets, any kind of impacts. Well, the reason why, my belief, and you're even closer to it than I am in terms of the actual structural side of the industry, I don't see how you can't say that the lack of confidence and recovery hasn't had to do with the fact that people don't know what to expect, and they keep changing.
Yes.
All the rules in the housing market.
Sure. Yeah. Oh, without a doubt. I mean, if you're a private investor out there, how could you decide, hey, let's do a private label security for housing? Why do I want to do that? I don't know what's going to happen. Just put some structure in place. Stick with what you have. Tweak it. Make Fannie, Freddie private, whatever you want to do with them. But just get that out there that here's where it's going forward. We're not going to have this 5-year runoff of Fannie and Freddie and create this whole new bureaucracy that nobody knows, well, what does that mean? Mm-hmm. And they're expecting private money to come back into this. I don't think that's going to happen.
And even like, for example, buyers of mortgages. Like, so for example, Wells Fargo, U.S. Bank, they buy mortgages. Folks, they buy mortgages from banks like my bank, Cornerstone Bank. Yeah. Okay, But they've set harder credit limits than are required
because they
don't
they're
know.
Protecting themselves.
They're protecting themselves.
Yeah,
So
exactly.
So the real, for example, an FHA loan, for a long time, the only rule on an FHA loan was that you had to have a 500 credit score. Mm-hmm. There was no minimum credit score.
Not effectively.
Yeah,
no.
And for the 3.5% down, you only needed a 580 credit score.
Yeah.
And that was a new rule. There wasn't even a rule before that. But places like the investors and like Wells Fargo, U.S. Bank, places like that were buying, and not just them, everybody. Some of them had credit score requirements of 660, 640, 620, which means anybody underneath those credit scores could. Places like my bank and Starian and other places that will sell off these mortgages could not originate those mortgages and sell them off to these people who will buy them.
Right.
Which left a whole class of borrowers unserved.
Yeah.
And the reason why the investors were doing this is because they didn't know what to expect. Mm-hmm. They didn't know if QM and QRM regulations were going to cause them to have more capital aside. Exactly. So they wanted the highest quality portfolios they could have for the best credit risk ratings they could get, so that in the end they spend less money.
Yeah, it just comes down to if you're running your own business and you don't know what your tax situation is going to be because there's all this flux going on. Same thing. I mean, you want some certainty in what you're doing before you stick your neck out, basically. So yeah. Okay.
I just don't know how you can't say that. That's my last word on it. Is I just don't know what kind of cloud these guys are walking on that they think that they can continually monkey with stuff and not affect.
Yeah, exactly. It's the monkeying that messes it up all the time.
So all right, by the numbers, we got some stuff by the numbers. We're going to close down the show.
More fun stuff, maybe. Yeah. Okay. Joe, did you know what the average age of the vehicle on the road today is when it was purchased? Take a guess.
All these new great jobs out there. I know people are buying vehicles like hotcakes. Actually, sales are actually doing better.
I say 7 years.
7 years, okay.
I'm going to say
mine is 5.
I'm going to say it's plus 10. I'm going to say it's plus 10.
Okay. The average vehicle on the road today in this country was purchased during the first quarter of 2003.
11 years.
So 11 years.
11 years.
Yeah.
That's not even the same kind of vehicle anymore.
No. Oh, gosh. You think about it. A 2003 compared to a 2014.
In fact, that might not even be on the lot anymore by name.
Yeah.
Yeah.
If you go out to Edmunds.com or something, and they don't even list it anymore, right?
Well, in fact, doesn't NADA only go back like 7 years?
Maybe. I don't know. Yeah.
That was before hybrids. That was before you had all the bells and whistles with satellite radio.
Well, you certainly don't have an iPod dock in there.
No.
Yeah.
There's no USB port
no,
there.
I have none of that in my car. It's just AM, FM radio
and
a CD player.
But you know what I saw last night? I saw a commercial for Subaru. they're putting a thing in, like a camera in front of their car that will detect a stopped object basically in front of you, and it will the car will brake itself if you don't. So that's coming quickly.
Yeah. Well, the other car in front of you will always brake you too.
Mainstream. Yeah. Well, yeah, absolutely. That stops you real quick. Yeah.
It's like if you fall off the roof, while you're working on the roof. Well, you always got the sidewalk to break your fall, right?
Exactly.
Always help you out.
Yeah.
So okay. Help.
Scary thought here. 45% of U.S. households headed by individuals of working age,
which is about 92 now.
Yeah, what's gone up? Yeah, have not set aside any funds for their future retirement. And less than half of Americans surveyed, 49%, have set aside funds that would cover expenses for 3 months that would be needed in the event of a financial emergency. That's probably because they tapped out all their rainy day funds already. A lot of people. They didn't have any choice.
We're talking about the U6 unemployment rate being at 14.6% for how long now?
Yeah.
We just saw the first annualized reduction in that.
What, 5 years probably?
So basically, really for a period of time, you could have said 1 in 5, 2 in 10 people were
they had to be tapped out.
We're spending money just to get along, and that's not the people who lost jobs, got reemployed right away, but at lower incomes, and probably had to tap out reserves to restructure debt. To be able to make their monthly payments.
Well, even if they could refinance into a cheaper mortgage or whatever through the programs that were out there, they still had closing costs to pay or whatever.
Absolutely. So No, I've done that not in low times, but I've had to do that where I tapped out reserves to restructure debt because I was opening a new business or something like that, and I had to change my cash flow. Yeah. And until the business got
not really
running.
surprising numbers, percentages are probably.
But you spend money to restructure cash flow.
No, let's talk about saving money here. This sounds like a no-brainer, doesn't it? Another thing that Congress isn't letting happen. The elimination of Saturday delivery of mail would save the U.S. postal system an estimated $2 billion a year. But Congress won't let them do it. Would you be greatly affected if you didn't get your mail on Saturday?
I don't look for anything important in the mail anymore.
Jim, would you be greatly affected if you didn't get mail on Saturday?
Not really.
No, me either.
I'm going to tell you what, if my wine spectator doesn't show up on time.
Well, then that might, if that was due to come on Saturday.
I'm going to tell you what.
Okay.
There might be a come to Jesus meeting.
All right, with the Postal Service. All right. But I think but think about it. If they can save $2 billion a year, maybe that's
all
okay.
right. Maybe it's
all right. You can wait till Monday.
Okay.
All right. So that Congress doesn't like that, so they're not letting them do that. But anyway, okay. Taxes. Okay, we think we got high taxes, right? Everybody kind of thinks, we're paying too much income tax, property tax, whatever. The top marginal tax rate for an individual taxpayer in Sweden is 56.74%. It begins on income levels of at least $66,000. The top marginal tax rate for an individual taxpayer in the United States is 39.6%, a rate that begins on income levels of at least $406,750. So our top rate is less than Sweden's, plus you got to make over $400,000 to get there. So we're not that bad.
We're not that bad
compared to Sweden. Yeah, I don't know about anybody else.
But what are they getting back for it?
A lot of stuff.
Supposedly
probably
they're like happy, aren't they? Aren't the Swedes a happy people?
Well, they appear to be. They get to ski a lot. They're really good at skiing, so maybe they got more free time.
Tall and blonde, and
they get more free time than we do. Maybe. Okay, well, Jim says we have to leave now because he started playing music.
Do you think they make as many hot dishes over in Sweden as the Swedes make over here in America?
No, that'd be a fascinating fact, wouldn't it?
How many hot dishes do they actually make in Sweden?
I don't know. Okay, well, Jim. Happy 4th of July.
Thank you.
Joe, happy 4th of July.
Happy 4th of July.
Enjoy the parade.
Independence weekend, folks. Yep. Come back to the show next Thursday, Mortgage Talk 101.
Who knows what's going to happen.
Unscathed and independent.
All right.
All righty.
New York, Los Angeles, oh, how I yearn for you. Detroit, Chicago, Chattanooga, Baton Rouge. Let alone just to be at my home back in old St. Louis.
ABC News, SuperTalk 1270. Accurate news, stimulating talk. This is KLXX AM, Mandan, Bismarck.